At Metropole TVKE across all your social media platforms. Hashtag business AM2146 as your SMS line. This is Metropole Television. Now the growing shift to solar power by major industries in the country that make up 54.8% of Kenya Power's already thinning revenue is pushing Kenya Power into a dilemma. In its latest annual report, the power provider laments that the shift is pushing it into more dilemma at the back of the increased power generation. Now, the company raised 63 billion shillings from the industrial customers who utilized 4,462 gigawatt hours in the year to June 2019, thus representing 45% of its revenue. Now, this is coming barely weeks after the energy regulator, EPRA, gave Kenya Power the green light to see its tariffs jump up by 20%. This morning, to help us get a perspective on this issue, we're joined by Odhiambo Ramogi, the CEO, Elema Capital, and we're joined by Collins Lodge, who's a lawyer and economic analyst. We apologize for that sound because we're trying to get more panelists to join us this morning. I'll be late. Okay, let's look at the data that we have for you this morning as concerns Kenya Power's thinning revenue, which they're complaining about. Now, if we go back to 2017 up to where we're right now, you could say that we did record the worst in terms of generation of revenue in 2019, which fell to 262 million shillings alone, up from 3 billion combined earnings in 2017 and 2018. All right. I want to start with you, Odhiambo Ramogi, the CEO, Elema Capital, this morning. Why are they crying? I mean, they have to expect that.
Well, the chickens have come home to roost. It's about time they also cried. Apparently, the rich also cry.
Yes.
And the monopoly controllers also cry. But it's an interesting time that Kenya Power is found, that Kenyans are switching to solar power and not using their services, or not really consuming electricity. Their electricity costs have really skyrocketed. They are too high, even for residential units that are traditionally not expected to cry foul. Industries are also complaining that the cost of energy in the country is just too high. And this doesn't make sense because, on the other hand, we are producing more power than we are consuming.
Yes.
And in fact, KenGen is producing more power than can get into our national grid. And so either there is the national greed happening at Kenya Power, or I think that the problem of independent power producers have really gotten out of control, because these independent producers produce power expensively using diesel, and then they get into very expensive contracts with Kenya Power so that their power is prioritized over KenGen's power. And this goes on for a very long time. So I think it's an interesting place for Kenya Power to be, and I hope that they will find a way out of this mess.
Pretty much. Let me bring in a Collins Lodge this morning as well. I mean, Collins, they're saying that they find themselves in a dilemma. You are producing more than you can sell, but then at the end of the day, you're turning in thinning profits. I mean, they gave us the worst result in 16 years. But then, Collins, at the back of that, you are also claiming that you need to raise your power tariffs within the economy. Is that where the disconnect begins?
Thank you so much, Simba. I think there's so much dishonesty when it comes from KPLC.
Yes.
Also on the problem with what is happening to them. And I think they're just apportioning blame to the wrong people when they're talking about solar power. In my view, I think what is happening to KPLC is something that has been coming for a very long time. KPLC for the longest time has been competing with Zuku with regards to unreliability and poor customer service. And so it has gotten to a time where its customers are already tired. You remember how much aggressive the last mile connectivity was, and they were forced by the government to outstretch themselves and do things that maybe they've never done before. Also look at the issue of their projections. I think for the longest time, KPLC has been having overly expectful projections that are, in my view, some of them have been so much unrealistic, and so now it is hitting them. That one, their consumers are tired because of the cost that you're incurring when you're using KPLC. Nowadays, I mean, they are so exorbitant.
Yes.
And so it has gotten to where the consumers are saying, we need to think of an alternative. Look at what Nevsky Group are doing now. They are starting their own HEP power plant. Same to, I think, Kenya Tea Factory. They are equally starting their own because they have realized that they are spending so much money on a service that they too can try and exploit, try and look at alternatives to that service. And so I think they have gotten to that time and that situation where now the captive power, they're just looking at what they can do by themselves. And equally, the issue of corruption in KPLC is something not to wish away just like that easily. I think these are many issues that have been compounded for a very long time, and now they're coming to hit KPLC in a very huge magnitude that they did not expect. And so to them now, the only place that they can apportion their blame is to solar power.
Yes.
And what I see, from where I see it, is that solar power is not to blame for all this.
All right, let me bring in Vyamba Ramogi this morning to also weigh in on this. Now, let me take you back before we had the Finance Act of 2020. Bigger manufacturers were enjoying power tariffs that were lesser than what the normal market value could be, because we're talking about pushing them into using our power grid and also improving manufacturing within the economy. Now, the Finance Act of 2020 came into place. That was expunged. Another way is that you have EPRO on this side saying, okay, Kenya Power, do you want to raise your tariffs? In as much as this is something that has been in the works for a year, it's just in 2020, a time when Kenya Power is also complaining about these alternative sources of electricity or power taking up their share, getting into place. That's when that talk is rife. And we do know they might get it because public participation in the country is also known how it goes. So my question is this, therefore, Odhiambo, should we go back and say, look, the best way possible for Kenya Power now is to go back to cheaper electricity so that more people and more of these industrialists who form 54.8% of the grid could go back and use it? Is that where they should start fixing their problems from?
Certainly, there is need for lower tariffs of electricity.
Yes.
Whether it is for the residents or whether it's for the industrialists, there is need for lower tariffs. You will remember that in the past we have lost a lot of investment to Ethiopia and Egypt in particular because their cost of energy is quite low. And one of the things that is driving the Ethiopian economic growth is manufacturing. And what they have ensured is that anybody who is coming into the country to invest there really accesses low cost of energy. And manufacturing, energy is huge in manufacturing because it drives the manufacturing industry, as it were. Now, when we, on the other hand, as a neighbors who are trying to compete for the same amount of capital, really raise our electricity tariffs, we are strategically positioning ourselves to lose investment. And we've seen even companies that have moved out of Kenya to Egypt because of the lower costs of electricity. And so the move by Ekuru Yatani was a desperate move because the government needs revenue as much as it can get. But it is at a time when, you know, we really need investment. There are too many corporate casualties out of this dwindling economy. And so it leaves a lot, I think it needs a lot of discussion and a keen observation to see its impact into economy. But perhaps then to take you back to the question of the cries of Kenya Power, there's a common story in economics. We call it the candle makers petition.
Yes.
That the candle makers in Paris petitioned the government against sunlight, that their buyers were no longer buying from them as much as they should because of sunlight. The government should come up with a way of covering the sun so that people can buy more candles. I think the Kenya Power has become like the candle makers of Paris in this case.
Collins, let me bring you in on that, on the background of what Odhiambo is saying this morning. Fine, good. But I want to take you back to that data, Collins, that we could actually look at it. I mean, when you look at the performance, I mean, 2017, 2018 combined, you could be talking about 3 billion in terms of profits. Now, back to 2019, 2020, Collins, 262 million. Now, if they start running away or not having that industrial percentage, which is 54.8%, if they start moving away, we could be talking about losses that are getting turned in at Kenya Power. I mean, what sort of situation do they find themselves in? Because, Collins, if you lower your tariffs right now, you get more hits in your profitability. If you rise or raise your tariffs right now, like they want to do, you are pushing more and more people out of your grid. So what next?
And I want to agree with you. And I think you can remember from 2017 to 2018 is when Jubilee had launched this, when they were trying to work.
Yes.
I think that is when they were at least at working. And that is when actually they had launched that last mile connectivity so much that they were telling us about 25% connectivity. That now they are moving to 50% connectivity.
Yes.
And I think that time they equally had a little bit of money to give even KPLC to try and raise up their fortunes. But I understand the position, and as has been rightly put by my good friend Ramogi, that you remember when they were raising tariffs by the CS even finance, and theirs was to hit at the taxes, they were not cognizant of what is happening to the consumers and where are you pushing the consumers and what can consumers do. You know, they had comfort in knowing that KPLC is a monopoly and so consumers cannot revolt against a monopoly. But now they're getting themselves into this situation that consumers have been able to get too much of this and now they're revolting. I don't know if you can remember this case of Paul Mboya that was being, they were talking about switch off KPLC at a time when a lot of consumers were rallying against KPLC and they were all for switch off KPLC. I mean, we as consumers can equally just try and look at other avenues. There's a time that KPLC had gotten into having a lot of cartels in themselves that you, even if you want to purchase electricity for KPLC, you have to go through intermediaries, and that you have even to pay your tokens through other companies that are subleasing. Even those cartels in themselves, and that is why I was talking about corruption, those cartels in themselves are what they have really costed them. And you remember that case was they opted to have out-of-court settlement because the damages that they were going to pay consumers were just unthinkable. And that's why I think they opted for out-of-court settlement. And we don't know how that case ended up going at the end of the day. But really, the position that it's finding KPLC now, they cannot reduce. I've been unmuted. I've been muted. I'm saying the position that KPLC are finding themselves now, they cannot reduce their tariffs. And because if they reduce your tariffs, I mean, your profits, already you've given warnings now
yes.
to your shareholders.
Yes.
You're not having a promise that they're going to resuscitate and come back. And if you still hold it there, I mean, for me, is to have a consultative and just to review how they are going to satisfy their consumers. Because the moment you have consumers contented, then your products can sell through whatever prices you're going to do it. But talk about unreliability and poor customer service of KPLC. Every person will tell you when they have a power blackout. And I mean, just go to Twitter and look at the kind of engagements that KPLC is having with people. Every time people are complaining about power blackouts. And now it's become a norm. When you travel out of this country, you realize other countries, they don't face power blackouts. And if they do, they get a huge apology from KPLC. But for us, we're being told every day there's maintenance. And you're wondering what kind of maintenance? I mean, really, for me, is for KPLC to look at consumer satisfaction at this point.
Pretty much. Gentlemen, I would like us to move away from that issue and move into the next one that we have for you this morning. Well, Kenya could soon be forced to take up a 75 billion coronavirus debt relief from wealthy nations if they are to continue with their wish to access cheaper loans. Kenya is now seeking to defer payments in the region of $690 million or 75 billion shillings in debt payments as it seeks a further loan to plug collection deficits caused by the effects of the coronavirus pandemic. Now, the UN had last week put Kenya on the spot for evading a G20 DSSI, which should have released over 97 billion shillings into the economy for the fear of deteriorating Kenya's credit ratings. Yasani intimated that they were skeptical in taking the deal earlier on because they did not want to risk painting the country as one that does not meet its debt obligations, but now considering to take up the arrangement after getting assurance about private debt. But at this point, I want us to look at where our external debt performance has really gotten us into as a country, and that's the data that we have for you on your screen this morning. You could actually look at that, yes, and also let's look at our debt to GDP, which therefore is a proper conversation now, as we know our economic performance has been greatly hit by the coronavirus pandemic. You could see up to where we are as of January 2020, yes, 34.5%, which is dropped a bill to 31.2%. Fine, and that is in millions, sorry. Good. Now, let's come back, therefore, and talk about this morning. And I want to go back to Odhiambo Ramogi so we can ask this question. Is Kenya now, especially when we're talking about this debt, in a catch-22 situation? Because IMF is introducing a condition that should you want to come for debt, then you have to take a debt relief, which we have, by the way, because it looks as if we have no other solution. Are we now in that sort of situation?
Pretty much, yes. We are debt stressed. Let me perhaps bring some context into this conversation.
Yes.
When the government went on a borrowing spree, they said that the economy could handle it. They said that bigger economies have a debt to GDP ratios of 60, 70%. I think even Japan has over 100% of debt to GDP ratio. And they said that being a smaller economy, we should be able to handle it. What they did not appreciate is that some of these countries that they were, equating themselves to, were not so sensitive to some of the economic shocks as African countries are, and especially developing countries globally. And so one of the challenges that we are having with the economies in Africa in particular is they are usually very, very sensitive to economic shocks. Like, for example, something like a recession in the US caused harm to African economies. Something like a war that is unplanned can cause harm to the African economies. We are at a point where when the West sneezes, indeed we catch a cold. And so now we are in the midst of a health pandemic. And then all of a sudden we realize apparently we took too much debt. And apparently we are not able to carry it the way the Japanese are able to carry it. Apparently we are not able to print dollars the way the Americans are able to print dollars. And apparently we are not dependent on the imports as opposed to exports. Yes. And our currency is deteriorating. And we are wondering why. It's because we are an African country and we are susceptible to shocks, economic shocks like this. And the worst part of it is the Minister for Finance, or the cabinet secretary in charge of finance, is playing poor game theory at a time when we actually need to get a debt relief. Because to tell us that you want to look good in the face of lenders, so you are not getting a debt relief, that's just game theory played at a very wrong time.
Yes.
And I think we need to up our game, realize that, yes, what the IMF is seeing is actually making sense. We are debt stressed and we need that relief. Already they are negotiating with the Chinese with the possibility of suspending some of the loan repayments that are coming up. And that look, we said this long and we said it loud and we said it many times, but government needed money and they borrowed. So we are just hoping that somehow they'll be able to manage their mess. I like what Colin said, that at that time they were at least trying. Now they are not even trying. Now they're living their lives and waiting for what to do with this BBI thing.
Yes. All right, Collins, just I want you to do a slight response to the next question that I'm asking you this morning, because I want us to take a short break and then come back and continue with this conversation. Now, this is exactly what we have, and I'm going to give you the review period all the way up to September, the 8 months that we do have. Now, debt servicing amounted to 246.29 billion in July to October 2020, with tax receipts reducing by 71.94 billion to 426.38 billion. Fine. Now that is the number that we have for you this morning. Now I also want to actually talk to you about this number. Now, despite those tax receipts falling by 10.82% or 29 billion on a year-on-year review, debt service costs were the single largest expenditure for the government. Collins, not development now, just debt servicing. Now, it means therefore that if you look at our debt profile, Collins, 58% of our taxes go to servicing debt. Now, to give you that in a proper value, 6 shillings out of 10 go into servicing our debt. Collins, when you have these figures for you, and then you include the COVID-19 pandemic, how would you therefore describe our situation?
Our situation is even more than desperate. I mean, really, and what I'd start by saying is that everything, in my view, starts and falls on leadership.
Yes.
And this is a tragedy that we are having when most of the leaders who are sitting at the helm of finance and treasury don't have qualifications to sit even there in the first place. And that's why when it comes to negotiating these loans, what they do there, their interest is to come back with money, regardless of the contract that they're having, regardless of the interest that are imposed on those loans. I mean, you'd be interested to know the restrictive clause that we have when you are talking about Eurobond. I just found out yesterday, the other day rather, that we have a restrictive clause on Eurobond that was saying that we should not talk about any restructuring of that loan. That should we even be tempted to talk about any restructuring of that loan or to delay payment of that loan, rather to defer payment of that loan, then we are supposed to be paying 652 billion
Yes.
of that loan, I think, per year. So you imagine such magnitude of interest that is imposed on us, or even such clauses. How do they pass the eye of representatives of government when they are going to negotiate for these loans? I mean, really, for me, I think it's just the interest of leadership. And that's what I'm saying. I mean, either our loans are so much imposed, rather the interests are imposed so highly on our loans, or rather their contracts, how they are structured. I mean, unless we don't have people who understand how to negotiate or how these terms mean to them when they are talking about these things, because you cannot explain such huge amounts that are being channeled towards just restructuring the loan, rather towards just payment of loans and servicing of those loans. And even the position that you're finding ourselves now, it is not even yet bad. I mean, I think after we've borrowed for COVID, because basically we have to borrow for COVID because we are definitely just surviving. When we come to next year, we'll have to borrow now to now, I think, bring up the economy again and to restructure the economy and to see how we are revamping things around here. And you want to imagine the kind of loans that this regime is going to leave the incoming regime. We'll get to a position where the incoming regime will not even have. Now we are talking about other facilities that IMF and World Bank are telling us to try and explore other facilities, that the ones that we have, we've already exhausted. We already have too much debt with them that it's even hard to go back and ask for more. So we're now starting to explore other facilities. And even the facilities that you're exploring, their interests are still very high. And so you can imagine the position that will be after this regime has left power, and the one that is coming to office next after this. I mean, I really pity them.
We take a short break here on Business AM. Once we come back, what is the way out?